Welcome to Blue Nile Tutorials. In this session, we're diving into our third chapter, Income from Employment Vehicles. Company cars and other employment-related vehicle benefits are a common perk, but they come with tax implications that are important to understand. We'll explore how vehicles provided by employers are taxed, what factors determine the taxable benefit like CO2 emissions and fuel type, and how to calculate the associated tax liability, whether you're an employee enjoying these perks or an employer managing them. This tutorial will make it all crystal clear. Let's break it all down and simplify the taxation of vehicles in employment. Let's get started. Welcome to this video on income from employment vehicles. In this session, we're going to look at the various ways in which employers can help employees in relation to their travel if they need a vehicle for both business and personal purposes. We'll look first at the situation where the employee has their own car which they use for work as well, and the employer reimburses them for mileage. We'll then go on to look at the reverse situation, where the employer provides the employee with a car which the employer pays for and allows the employee to use for personal journeys, commonly known as a company car. And finally, we'll look at a similar situation where the vehicle is owned by the employer but is instead a van rather than a car. First of all, we're going to look at mileage. What we look at here only relates to the scenario where the car is that of the employee, either owned or leased by them, and the employee is covering the day-to-day running costs of the car, such as the insurance, fuel and tax. There's an approved rate at which an employer can reimburse an employee for miles travelled in the course of their employment. This rate is 45 pence a mile for the first 10,000 miles in the year, and then 25 pence per mile thereafter. One of the key concerns, though, is that the employer should only reimburse for business miles. So let's start by considering this. Business mileage includes miles travelled between the employee's normal place of work and a temporary site such as a customer or supplier, between home and a temporary site such as the customer or supplier, between home and a temporary place of work. This could be anywhere that the employee is or has been required to work for a period of less than 2 years, so it could be a different office, for example. One journey that can never be considered business in nature is the journey between home and the normal place of work. Let's look at an example. Scott works for EB plc in Oxford, but lives 20 miles away. He spends one day working in London undertaking a training course and travels 180 miles. And 3 days at new offices in Swindon, travelling a total of 420 miles during the year. The daily mileage between Scott's home and work are not business mileage. But the 180 and 420 miles for the training course and visiting the new offices would be travel to a temporary workplace, so these would be considered business mileage. Any amounts reimbursed to an employee using the approved 45 or 25p per mile rates are tax-free. So we would not need to include the reimbursed amount as income, nor would we deduct any allowable expenses. But most employers do not actually change the rate at which they reimburse mileage depending on the number of miles travelled. It's far more common for an employer to simply state one rate of reimbursement, such as 30p a mile or 50p a mile. So we also need to consider what happens if the amount reimbursed is more or less than the tax-free amount using the approved rates. Take Steph. Steph travels 12,000 business miles during the tax year. Her employer reimburses at a rate of 50 pence per mile. The amount which Steph receives from her employer will be 12,000 times 50 pence, so £6,000. Using the approved rates, the maximum Steph can receive tax-free if 10,000 times 45p, and then 2,000 times 25p, so £5,000 altogether. There is therefore a £1,000 difference being too much that the employer has reimbursed. This £1,000 would be treated as extra employment income for the year. Now let's consider Simon. He also travels 12,000 business miles during the tax year, but his employer is less generous and only reimburses at 40 pence a mile. This time Simon will receive £4,800, but the tax-free amount would still be £5,000 using the 45 or 25p approved rates. So this time he receives less than he could have. The difference of £200 is considered an allowable expense and deducted from Simon's employment income for the year. Remember that the mileage rates we've just discussed only apply where the employee owns or leases the vehicle. What we will now move on to is the company car situation, where the car now belongs to the employer instead, but he allows the employee to use it not just to undertake business journeys, but also to take it home at the end of the working day and use it for personal journeys as well. The benefit to the employee here is that they save money at not having to buy or lease a vehicle, nor tax or insure it. We'll consider the position with the fuel in more detail in a moment. What we need to work out though is how to value that benefit for tax purposes. The tax legislation provides a specific way in which to value company car benefits, which is to take the list price of the car and apply a percentage to it. We need to consider each part of this equation in some detail. The list price of a car is the result of three things. The dealer price of the car when new. We also calculate the benefit on this, and not the amount actually paid by the employer, which may have been discounted, or the current market value when the car was purchased. The cost of any extras. When buying a new car, there will be lots of potential extras to the basic model of car, like adding in sat-nav systems or having metallic paintwork. The total cost of these extras is added to the dealer price when new. Any capital contribution paid by the employee. We discussed in an earlier session the deduction of employee contributions. This is a specific type of contribution. Here we're not looking at an amount the employee pays to the employer each week or month, but instead a lump sum paid when the car was first made available to them. We generally deduct this contribution here when calculating the list price, but it is capped at a maximum deduction of £5,000. The second element of the calculation is a percentage, which is based on the CO2 emissions of the car, which will always be given to you. There are fixed percentages used for cars with relatively low emissions, but in other cases, we may need to calculate the percentage to be used. The fixed rates for Finance Act 2018 are less than or equal to 50 grams, 13%, 51 to 75 grams, 16%, 76 to 94 grams, 19%, 95 grams per kilometre, 20%. Where the CO2 emissions are more than 95 grams per kilometre, this is where we would calculate the percentage to be used. For any car which runs on diesel rather than petrol, a 4% supplement is added to the fixed or calculated percentage, but the final percentage we use is capped at a maximum of 37%. Now let's look at how to calculate the percentage to use where the CO2 is more than 95. The formula to use is 20% plus the CO2 minus 95 divided by 5, but the CO2 figure entered is rounded down to the nearest 5 or 0. We can put all of this together now to look at an example calculation. So, Betty was provided with a new petrol-powered company car throughout the tax year. The car has a list price of £16,400 and CO2 emissions of 109 grams per kilometre. The company car benefit calculation is the list price multiplied by a percentage. Here the list price is simply given to us, but as the CO2 emissions are greater than 95 grams, we need to calculate the percentage to use. We use the formula to calculate the percentage. 20% plus 105 minus 95 divided by 5. Remember, we round 109 grams down to the nearest 0 or 5, so here we use 105 in the calculation. The car is petrol powered, so there's no further supplement to add, which gives us percentage to use here of 22%, being the 20% for 95 grams per kilometre and an extra 2% for the calculation we performed on the excess above 95. The car benefit would be 16,400 multiplied by 22% then, equaling £3,608. Let's look at another example. Diana was provided with a new petrol-powered motor car throughout the tax year. This car has a dealer price when new of £84,600 and CO2 emissions of 218 grams per kilometre. Diana made a capital contribution towards the car of £1,200. Again, the car benefit is calculated as list price multiplied by percentage. For Diana, we have to calculate the list price as she made a capital contribution. So this time the list price is £84,600 minus £1,200, being £83,400. The relevant percentage again needs to be calculated using the formula as the CO2 is greater than 95 grams. And this time, it would be 20% plus 215 minus 95 divided by 5, which would give us 44%. But remember, we said the maximum percentage we could apply is 37. So for Diana, the car benefit would be calculated as 83,400 multiplied by 37%, so £30,858. One final point on company car benefits is to remind you of the general principles we discussed in a previous session which do apply here. If the car is available for only part of the year, the car benefit is time apportioned accordingly. If the employee makes regular contributions towards private use of the car, rather than capital contributions like the one paid by Diana, these are deducted from the benefit calculated. So just moving on slightly, sometimes employers will also pay for all the fuel for the car to cover both business and personal journeys. This creates an additional benefit to the company car calculations we've already looked at. In these cases, we calculate a car fuel benefit using the car fuel base level and the same percentage used for the company car calculation. For the 2018-19 tax year, the base level is £23,400. So if we continue with Diana, if her employer pays for all of the fuel for the car as well, she'd have another benefit to include in her employment income, being the car fuel benefit calculated as 23,400 multiplied by 37%, giving £8,658. One final point on the fuel benefits is to go back again to those general provisions. Time apportioning is necessary for the car fuel benefit where the employer only provides fuel for part of the year. But no deduction from the benefit is allowed for any contributions the employee makes towards their private fuel. The calculation of a car fuel benefit is not affected by how many private journeys the employee makes. So contributions towards some of the private fuel has no effect unless there is no private fuel provided by the employer at all. This is very difficult to prove in practice. There is one final vehicle situation for us to consider, which is where the vehicle provided by the employer is a van rather than a car. The basis of calculating a van benefit is entirely different to cars, as instead of looking at the value or CO2 emissions of the van in any way, we simply use a given van benefit figure of £3,350 per annum for 2018-19. As with car benefits, time apportioning is necessary for the van benefit, where the employer only provides the van for part of the year, and a deduction from the benefit is allowed for any contributions the employee makes towards their private use of the van. There is one unique rule for us to quickly think about with van benefits though. For cars, even if the only private element of use of the car is the journey to and from work, the car benefit would apply. However, for vans, HMRC take a slightly more relaxed view. If the only private use is minimal and incidental to business use, no benefit is included as employment income. Examples of the private use being minimal and incidental could be where the employee takes the van home at the end of the day and uses it to return to work the next day, and maybe even stops en route to purchase their lunch. If this is the only private use of this van, we wouldn't include a benefit at all. Similarly, they use the example of where the employee uses a van maybe once or twice a year to take rubbish to a tip, as a case where no benefit would apply. Just as with cars, employers sometimes pay for the fuel for vans in the same way, but again the benefit for this is simply given as £633 per annum for 2018-19. As with the car fuel benefit, time apportioning is necessary for the van fuel benefit, where the employer only provides fuel for part of the year, but no deduction from the benefit is allowed for any contributions the employee might make towards their private fuel.